And I got to tell you, I realized right then that David is one of the most brilliant guys I have ever met. And I'll tell you, his insight into this industry is, second to none, equal to some, but certainly second to none. Okay, big guy, you're on.
Okay, thank you. Don't you hate introductions that you have to try to live up to? What I'm going to do, Eric will be coming on in a little while, and he's going to deal with the Yukon area play. So what I'm going to do is just speak a little bit to market and probably have a few minutes for a couple of questions before we introduce some more companies. What I'd like to do before I do anything else, as it's our first subscriber session of this type, the first thing I'd like to do is thank our subscribers for being that. That supports us in what we do. We both get to make money that way. I'd also like to thank the companies, the ones that are here as sponsors and the other ones who go out and do the field work and make us look smarter than we tend to think we are. So having said that, what I'm going to do is just, like I said, chat about the market for a little bit. There'll probably be a few minutes left over when I'm done that. A couple of questions. Ideally more market specific than company specific. You'll have 10 companies to listen to here. And you just got your updates yesterday if you are subscribers. So, first thought, we're still very much in a post-crunch market. We don't mention that every time we write something, but we think about it every time we look at something. The upshot of that is that it's still a tough market to read on the whole, but it is very much a gold market. The insurance value of gold is something that's building in the minds of investors, and pretty much on a global basis. It's not going to go away because people feel better about the economy. So our feeling is that the gold market persists for some while yet, not because the world is going to come to an end, but because people have rethought the value of gold holdings in their portfolios. That it's currently strong, I think, is evidenced by days when, in fact, the metal itself is seeing price consolidation, but you look and see that the producers, the senior producers, and a number of the juniors are still seeing price gains. In other words, people are coming into the sector. And I do think that we've reached a point, after a long period when being in the metal was garnering stronger gains relative to owning producers, we're now at that flip point where the equities should do better than the metal itself. The reason for that is that the producers are making money. The process the base metal guys went through a while back is now in play for the gold producers. They've paid down their debt. They've dealt with the bits of infrastructure that went wanting while they were dealing with low gold prices, and their bottom lines will improve. That's, I think, what's really bringing people into the sector at an equities level, is that recognition that these are companies that are making money and can continue to make money. The other thing driving it's the M&A activity. There is very much a movement to look around for companies that might be taken over, that have that potential. The Underworld takeover earlier this year showed that companies can be taken over earlier than expected, and the last couple of takeovers, big ones, in Argentina of Andean by Goldcorp, and in West Africa of Redback by Kinross, are showing that these producers are very much willing not to look at 43-101. That's not their job. Their job is to look at the company as a whole and the potential within it, and they're willing to buy potential. What they do want is scale. Regardless of what their size is, they're going to be looking at districts that allow them to continue or to expand from that scale. That's very important to them. So in looking at companies, we're thinking the same way. We like to see scale within the company itself, the exploration company, but also within the region, the district where they're working. That's fairly important to our thinking as well, for just that reason. We do like takeovers. We do like to own producers for a fraction of their current value. And that really is our focus. I think In terms of the broader market, as I said, it's still a tough market to get direction from. And I think that that means that whether it's up or down, we're going to be in a grinding market for quite a while. It'll grind up or it'll grind down, but it's never going to become a light switch one way or the other. I don't think that we're in for another major dump. I just don't see things as being that dire. There are very serious issues and they need to be watched. The excess housing stock in the US and in parts of Europe is something that needs to be dealt with, and it's more than just putting aside the mortgages. The stock is there. You can't stabilize prices while there's more product than buyer. So, and that's a process that's going to take a while. I think the recent movements in the yen are showing, that people want a diversification in their portfolios, hence they're willing to buy the yen, which is another large turnover currency, but as much they're showing that the world's looking to Asia to try and help underpin the global economy. We've always said that we felt the yen acts as a proxy for Asian growth, and while the yen is strengthening, despite concerns about the Japanese economy, we view that very much as a signal that Asia does need to do well. It does not have to be in booming growth, but it needs to continue to be prospering. So we do look for that. All of that said, the fundamentals within some of the base metals, copper in particular, we still like. The fundamentals speak to supply constraints in the future. So while we are focused on gold, we don't ignore the other metals. Copper is still very important to us, and although this is mainly a gold forum as it's turned out, we do always have a few copper plays and a few other things going because we think that set of fundamentals will hold sway in due course. Right now, the copper price is pretty strong. We're not telling people to rush in, nor would we, barring one or two exceptions where we think the takeover potential could be nearer term, not to rush into base metals, but not to avoid them altogether either. That's what I basically wanted to say. I mean, our subscribers probably get tired of reading what we have to say, and for those of you who aren't, well, where's Nicola? Anyways, what we really wanted to do here was to let you people meet some of the companies. We are fortunate that we have the time and the access to talk to these people and to get to know them and understand how they work. This is a forum that should help you do that. You should listen to them in a small room perspective, and after the next couple, there will be time to have coffee and have a chat with those ones that you don't know. So what I'm going to do, if that's all right, is to open up for questions, because Eric's doing if you would, the HRA presentation that we had planned for this. I've given you my basic thoughts. Just a couple of questions.
What is your outlook for silver relative to gold?
The outlook for silver relative to gold, we always tend to view silver as the more volatile cousin of gold on a day-to-day basis. Right now, silver looks just great. We would say that silver is likely to do better than gold, but we don't expect silver to do well unless gold is also doing well. That's the gist of it. The industrial versus precious metal aspect of silver, honestly put that aside for the most part. It's about market sentiment, and the sentiment is good for silver right now. It's being bought as a precious metal without question. And it's one that I think will do better than gold, but only if gold is doing well, as I said.
In light of the fact that Goldcorp paid over $1,000 an ounce, as I understand it, for Andean, do you see the takeouts going at a much higher price for gold? How much is an ounce of gold in the ground worth now? I guess that's the question.
Okay. Value of an ounce in the ground is highly variable. That's the first point. What a company's going to do when they look at a gold deposit as a potential takeover is go through all of the numbers. What's it going to cost to capitalize and put it in production? What are the operating costs going to be? How much gold per year can we pull out of it? Do that calculation. Based on that, how much money do we have to spend to acquire the deposit? comes out at the bottom after allowing for profit and hopefully a decent profit. What Goldcorp has done is what they did, and we thank them very much at the time for it, in 2005 with Virginia. At the time, Virginia had 0 ounces in the project they were buying. It had ounces in a couple of its other projects, but it got to keep those. So what Goldcorp did was just go through that data process. They determined how much gold they thought was there. They determined how much upside it might have. And they determined that a price at the time, if you assumed 4 million ounces, which was the ballpark we were playing with at the time, they were paying in the order of $80 or $90 plus exploration upside. There's 9 million ounces in that project, so they actually paid less than $50 an ounce, as it turns out, $50 plus the exploration costs they've had. They're doing the same thing with Andean. They're looking at a project that has 3+ million gold ounces, another 60 million, we'll call it an extra million gold ounces equivalent in silver. And they're saying, we like this. They wanted to do a deal. Eldorado came along, did a deal, put a deal on the table. Goldcorp rechecked their numbers and put a bigger price on the table in the belief that the recent exploration by Andean is representing a much bigger resource potential there. That's one. And now the other, and this also relates back to Virginia, they're walking into a district that's fairly new. In the case of Virginia, in Quebec, it's a new district close to an existing strong mining infrastructure that they can make use of. In the case of Andean, it's a new district to mining, new in the sense that it's less than 15 years old, but the infrastructure's been getting built, so they get that infrastructure advantage to some degree as well. But the big upside for them is that they're walking into a district, and I'm talking about the broader Massif, not just the Andean property package, which is highly underexplored and has a lot more upside potential. So by putting themselves there, they become the big dog in southern Argentina, at least for gold, and off they go. So those are the reasons. It's not $1,000 an ounce. They wouldn't pay that much. It wouldn't make sense. What their expectation is, I don't know. They haven't phoned me to tell me. But I would guess, based on the price tag, that they're expecting at least a doubling or a tripling of the resource, but as importantly, they feel it's worth the premium to be in that part of the world. So that's what they're paying for. It's not just a per ounce based on what Andean's outlined so far. Is there another question? It's a very good question, by the way. It's what I should have written down to talk about, actually.
You can just do it from there. It's okay.
Okay.
Yeah.
Could you just comment, it seems a lot of the plays that we're now seeing in Alaska and Yukon, where infrastructure is limited at best, are also very low grade. They're all sub a single gram. And I'm wondering at what point I noticed many plays now as gold prices have been going up, they've been looking more interesting. But there must be a level where in those limited infrastructure areas where you really got to be very optimistic about a long-term high gold price, or you're never going to make it.
Yeah, absolutely, you have to be. Did everyone hear the question? I should start with that since there was no mic. Question was about costs vis-a-vis Alaska and the Yukon in reference to sub-gram deposits and the high costs in the north, all of which is true. I'd say one thing first, they're not all sub-gram. Part of what's been going on in the Yukon is there's been higher grades developed. And I worked in the Yukon, a little bit in Alaska, but mainly in the Yukon when those sub-gram deposits were first being put together. And most of them didn't work, it's simple as that. There have been infrastructure improvements, and this is on both sides of the border. The electrical grid in the Yukon has recently been expanded. The highways have been paved, et cetera, et cetera. So there has been incremental gains, and the same thing's been going on in Alaska. 30 years ago, what was driving the cost of being in Alaska was pipelines. Well, on a relative basis, it was a much more expensive place to be than it is now. So at that level, there's been cost gains in Alaska as well, and there have been the incremental infrastructure gains. In the final analysis, a mining company's got to be able to handle its own infrastructure. You'll get a bit. I'm talking in the north, you'll get a bit, but that's not really much different than working in a lot of other places in the world where there has never been an infrastructure developed. Sure, you go to Nevada, you plug into the grid, you carry on. But if you find a deposit in the high Andes or Argentina, as I was just talking about with Andean, trust me, there's no grids there. There's a few local ones near the coast, but basically there is roads, and there's wind that blows 50 miles an hour almost all the time, but there's no power. You're going to bring your own in. So it's not different there. So it's still a cost equation. And yes, you do have to have some comfort that the gold price is going to stay up to make that commitment, but that's how the sector is working now. The sector is much more comfortable of sustained prices for all metals and for gold in particular right now. So there has been a reevaluation of, I know that the data was there. There's been a few people who've really focused it recently and done excellent work and brought potential to discovery and in at least one case to sale. More will, and I think that it's just the Yukon's time. Now this is something I hope is an old Yukon hand. I mean, some of the targets that are being worked on now is stuff I worked on before they were targets. So, you know, I've got an affection for it. I recognize that when I look at the data, but the numbers are working. And the answer to your question is also, as that buildup continues, each mine helps the next one along. The sector's not competitive at that level. If this guy builds some infrastructure, other people get to use it. And in fact, there'll be a few cases here where that'll come up. Infrastructure was mentioned in places that have a stronger one, but that holds true both in the Yukon and in Alaska. As the first bit gets done, it helps the next bit along. So that's the kind of momentum we're seeing. It's much too soon to say that it's a big expansion, but the potential is on the table, and that's on both sides of the border. We've been fairly Yukon focused this year. We're not by any means ignoring Alaska. There's a lot going on there that we like, and we think we'll get better recognized next year. It's just a timing of work issue. So I wouldn't ignore them because you're worried about costs, but you're very smart to be aware of those costs and to build that into your thinking. It will need to be a little bit better than it would in, say, Nevada, but it can be dealt with.
You mentioned the Japanese yen. We noticed that last night they came into the Forex markets and bought euro and the US dollar, and they're trying to devalue their dollar or their yen. So do you find that this might be the start or the catalyst that's going to start the race to the bottom for all of these currencies trying to be the cheapest to help their exports out, which in turn will raise the price of gold?
I think after about 5 years of really not intervening very much in the market, it was an exceptional circumstance. There was a vote in the Diet to confirm, which, as it turned out, to confirm the current Prime Minister. That started a yen rally, and that's a circumstance where the Bank of Japan coming in to intervene just makes sense. It's a reasonable thing to do. I don't think it's the start of a competition. The strong yen is something they're very worried about. Personally, I think it's something they're just going to have to learn to live with. I mean, that's how they should focus their thinking. But I don't think it's a competitive anything at that level. Central banks will cooperate to the extent they can with these things. And the one other point to attach to that issue, while the world is insisting that China needs to push the value of its currency higher in order to support their exports, it's very difficult for Japan to be going back to its old model, which was very much that, a weak yen for 15 years. So I think it's going to be very interesting to watch, but I don't think that there's an easy outcome or that there's a competition coming that's going to hurt the global economy per se. It may hurt aspects of it, but not all of it. And that's all I've got time for. Thanks very much.